My client's wife died, early 60s, way too young. This isn't a video about holding those you love close, though you should hold those you love close. It's about beneficiaries. Thankfully, this couple had things buttoned up, but many don't. And as a financial professional, when someone dies, I can't help it, but I think about all the horror stories that could have been avoided. An argument could be made that the easiest financial document to complete is a beneficiary form. Yet somehow, this basic information consistently gets overlooked, it gets mishandled, lost, or just fouled up. The result, one of the most common and potentially costly retirement and estate planning errors that savers and investors make. In this short video, I'll share the negative outcomes we're trying to avoid and what to keep in mind when you update your forms. Here's one thing we definitely don't want. You know this word, probate. In easy to understand terms, probate is simply the legal procedure your estate goes through after you pass away. During this legal proceeding, a court will start the process of distributing your estate to the proper heirs. It's time consuming and it can be really, really costly. Hi, I'm Darryl Rosen, your financial strength coach. The purpose of this channel is to help you create safety, simplicity, and most of all, financial strength at any age or stage of your journey through life. In this case, your journey may be over. This is about helping those you love pick up the financial pieces as easily as possible. The reason accurate beneficiary forms are so important is that they're kind of like the 800-pound gorilla when it comes to distributing assets after death. Often, whatever your beneficiary statement says outweighs what your estate plan says. This from CNBC. In addition to thinking a will outweighs a beneficiary form, many people fail to check and change beneficiary forms because they regard it as the job of the plan custodian or administrator. In fact, plan documents may have the name of a spouse or dependent already filled out as a beneficiary, but custodians can make mistakes. Some people think the state will sort things out. They won't, without involving the courts. Others fall prey to common misconceptions, which are perceived rules of thumb about how assets are distributed that may be wrong. Check your beneficiaries. So here are the three things we're trying to avoid. Number one is probate, the legal procedure your estate goes through after you pass away. Probate is costly and time consuming. Costly because professional fees that are charged by the executor or administrator and any professionals such as attorneys and accountants who are engaged to assist with the estate settlement process. This much is clear. Naming a beneficiary on an asset means you can avoid probate. Like life insurance, if you think about it, life insurance policies have named beneficiaries, so the proceeds go directly to them without having to go through probate. The second thing we're trying to avoid is having to pay taxes sooner than required. If your IRA ends up going to your estate rather than a named beneficiary, the estate can be forced to withdraw funds and pay the tax on those withdrawals over a fairly short time period. And here's the last thing we're trying to avoid, a different outcome. Being very clear in checking your beneficiary forms ensures that you can rule from the grave. I know that's morbid, but if you want your wishes followed, make them clear. You may not know this, but every state creates its own laws that govern who inherits when there's no will, but most follow the Uniform Probate Code. These laws attempt to provide for inheritance in a way they assume the average person would do so if a valid will existed. But this means that people who wind up with the asset may not be the ones you might have preferred. After marriages, divorces, births, deaths, and other major life events, check and if necessary, update your beneficiary statements. By the way, this is not just IRAs or the traditional Roth or Simple or SEP varieties, but beneficiaries should be checked on 401k plans, 403b plans, deferred compensation employer plans, life insurance policies, 529 plans, and any bank or other account designated as transfer on death. And this includes traditional brokerage accounts. So what should you be checking for on the beneficiary form? This is from Ed Slott, who you know is the IRA guru. We want to consider, where is the beneficiary form? Is the form current? And what I mean are names and other particulars accurate, spelling, birth dates. Are contingent beneficiaries named? If there are multiple beneficiaries, does the percentage of inheritance add up to exactly 100%? Has the Secure Act, the act from a couple years ago, been considered, and the new 10-year payout rule? There have been some changes. Also, if you created an addendum, will the custodian accept it since it was not written on their original form? There are other considerations, but these are some of the biggies. Some details may seem trivial, but case law is filled with examples of little errors really screwing things up for people. Beneficiaries for many retirement accounts can be conveniently checked and changed online. For others, account holders need to request necessary documents from the administrator or custodian. Look, we know death is an inevitable part of life. Planning ahead can help you secure your family's future when the time comes and give you some much needed peace of mind.